Hello, this is Huskins, your Forex mentor. I'm going to be discussing the trade news event, trading the interest rate statement. The event was out on at 5 p.m. on Wednesday, July 25th. So let's see what happened. Um, there were two different trades. One was the spike and one was the post spike trade. The interest rates remained the way they were, so it did not give us a spike trade, but it did give us a post spike trade. Now, the idea was to load the 5 minute New Zealand US dollar chart, wait for 5 minutes into the news, and see the New Zealand US dollar 5 minute news candle. If it was a buy candle, consider going long, and if it was a candle, consider going short. And the target was either 25 or 50 pips. So now let's see what uh, actually happened. This is the New Zealand US dollar 5 minute candle at 5 p.m. That is 1700 Eastern Standard Time. Okay, so let's see what happened here. We had the news come out, and we had a nice long New Zealand US dollar was a nice buy candle. There weren't any wick. So this would suggest that according to the trade plan, we should have gone long from uh, about 0.7905-ish area along with spread is where we should have gone long. But what I did was that I saw these highs out here. I thought that yes, the trade idea, the trade plan is to go long, but because we have resistance out here, it's at least going to try and retrace a little bit and come down to the 0.7900-ish area. And when it does, I want to buy it from there. Um, because there were two things working out here. 0.7900 is a good support area, so uh, why? Because it's a even number, right? Anything with which ends in 00 tends to be a good support area. And we had resistance so close to the 5 minute news candle. So idea is that market will go up, retrace down, and then instead of being filled in right now at 0.7905, I could have been filled in at 5 pips better. That's one logic. And another logic is that I wasn't even around at 5 o'clock. So when I started watching the trade, at 5:10, 5:15, the market was further away from my entry level, and I did not want to, get even a few pips more worse than what my fill should have been. So that's another reason why I placed my trade at 0.7900. So uh, the market starts going up, and I started watching this trade from about 5:10. I had some personal works, I had gone to accomplish that, and um, now as I expected, right from these levels, the market turned around and finally got me into the trade at my 0.7900 area. So, though the trade plan says I should have been long from 0.7905, I got long from 0.7900, which is fine. And the market goes a little bit against us. And then I exit one of my trades at 25 pip profit, and I move my stop loss to what would have been my original entry price. So I move my stop loss on my other trade to 0.7905. So now one of my trades in this particular account has closed at a 25 pip profit. On the other account, I try to uh, go for higher profit levels, and I have moved my stop in the other account to 0.7905 ish area. Now let's see what happens. The market goes, and it stops me right around out here, and then the market just turns around and hits the star. So on my other account, I exited close to break even, while as in one account I made 25 pips. Now I could have, should have, would have, moved, even if I had moved my stop to my real break even, which was 0.7900. I would have made the 50 pip target on that trade, but then foreign exchange is full of could have, should have, would have, but was not. So this is what the trade ended up being. On my other account, it ended up being a plus 5 pip profit. On this account, it ended up being a plus 25 pip profit. Thank you so much for watching.